Yeah, I met you when you were looking to buy a house, which was great. And that was how many years ago?
We've been in 3 years next month, yeah.
So as a businessman and family man, what made you decide to come to Casuarina and explain behind bringing a business into a new arena, how that worked for you?
Yeah, so for us initially, we made the move from Brisbane to Talabudra, so up on some acreage up there. My brother was building down here, so the more time we spent down here, with him and in the community, the more we loved it. So I think ultimately it was the community that got us down here. Obviously being close to the beach was fantastic as well, but just going everywhere and meeting people, and obviously really nice vibe down here. So that was the catalyst for us coming down. In regards to the business, so I worked at build a lot of referral networks up in Brisbane. Obviously that's where I was from for the last 10 years. So to make the move down here, daunting when you sort of built something up over 4 or 5 years and then you cut it off. Having said that, the confidence is in the area. There's a lot, obviously people love living here, but also there's a lot going on in the area, so a lot of infrastructure, and we believe it's only going one way, which is up. So daunting at first to cut it off, but with the office has been open 12 months now, and couldn't be happier.
So you're located in the Commons, right next door to Tucker Cafe, which is pretty handy because a lot of the locals frequent it. So how long has it taken you to build your local business up? For people coming into the area, that's a huge question.
Look, again, it's one of those things, we're broking. You don't have to be in the area to do a loan for the area, so we obviously can do loans for anyone all over Australia. A lot of my clients are based overseas, being professional sports people. So it's not so much an area of only do loans for people in the area. Having said that, to answer your question with the local business, very much getting more and more people walk in now or contact us via online. Obviously, we've got some good social media networks with the Casuarina Kui and the Kingsley Happenings and the Bulgarians.
There's good things to plug into already in that are established.
Absolutely, and I think just feeding off the back of that community thing as well, like people like to support locals, which we do too. We obviously sponsored the local rugby club, and we're looking to do some new stuff going forward with some charity things, some local charities. So
that's awesome.
I think that's the best thing about our area.
The referral connection comes so naturally when you contribute to something that you're clearly passionate about, with that being your background.
Absolutely. So which again, it's that sort of the thread of the community. So
that's awesome.
So and as you mentioned, being next door to Tucker is also nice.
Has been a good thing for that morning coffee.
Thank
you, Tucker.
No, absolutely. So we do get a lot of people from interstate. So people that are obviously moving here or selling and moving here, similar to what we did. So we get a lot of them. A lot of usually high net worth clients. They've either sold in Sydney or Melbourne, and they're pretty cashed up, and they're moving to for a lifestyle change. So with that, self-employed. So a lot of self-employed people, a lot of people with multiple properties. So they've got a lot of commercial, residential investment. You also get those people that grew up here, left, and now they're coming back. So they're also nice to try and get them into the property market. The boomerangs, exactly. So they're also nice because you really want to help them get back into the market, which is great. But then obviously we've got Kings Forest, we've got Boggangay, you've got Pottsville. So there is also entry points there for first home buyers as well. So it really is a mixed bag, which is really good.
It's nice. It makes your job more interesting.
It sure does. It you'll get some. I deal with people with all walks of life. Obviously, the nature of what I do, and it's more often than not the ones that are the most unassuming that come in and have got the most behind them, and you have some interesting conversations.
One question: we've just helped our daughter buy her first home, actually in Casuarina, or Boggangay, I should say, and just going through the loan process. What would you say? When people find a house to buy and they haven't yet started a relationship with a broker, and we refer them to yourself, how can they get ahead so they don't lose out on the property that they've got their heart on? Because in New South Wales, of course, gazumping is unfortunately part of it. And so how can someone get ahead? So by the time they make that offer, they're not behind the ball and they can really get finance going quickly.
Yeah, so as you mentioned, especially in a hot market, you really do need to have your finances in order. So I guess first and foremost, having a pre-approval in place would be ideal, because then you've ticked that box of you can borrow X amount of dollars, and then it's always just subject to security. So then we really only need a valuation, and then we're ready to go. If that's in an ideal world, not often the case. The nature of what we do is we do loans all day, every day. So we kind of know what works and what doesn't. So by having a conversation, looking at pay slips, looking at statements and whatnot, we can usually give someone a fairly good indication whether they're going to be right or not, and then obviously then they can push ahead and make their offers and with confidence, knowing that we just need to tick that box and
having their tax returns up to date, enormously important.
Yep, absolutely, especially if you're self-employed. Again, this is where we're working with a broker. You've got 40 odd different lenders, and they're all going to have different requirements for certain income sources. So if you're using lots of commissions or bonuses or whatever, then pay slips, tax returns are probably going to be important. If it's just straightforward base income, tax returns are not as important.
Right.
Again, every lender will have a different policy, and more often than not, you'll start off with 40, and it narrows down pretty quickly based on individual circumstances and what we're actually trying to do. But definitely tax returns up to date. ATO tax debt's a big no-no. So correct. Spending habits, obviously, bank statements.
That's a huge new one. Even the coffees.
Yeah, exactly. So gone are the days where you've got deposit and you've got income. Yep, approved. Or the property security's okay, it's approved.
Yeah.
The assessors are now making judgment calls on spending habits and account etiquette, account conduct. So things like, we get it quite often where, especially with the local RSLs, where people are constantly buying a round of beers or in quick succession. That can also be linked to sort of gambling and things like that. So they're looking at those sorts of things.
For them.
Correct. And it might not kill the deal, but it'll set off a red flag for them to look closer. And then usually if they look closer, then all of a sudden it undercovers this other stuff. And once you go down that path, it's pretty hard to change an assessor's mind.
Yeah.
Because they're obviously under the spotlight
as well. It just limits what you can do in terms of your loan structure.
Correct, yeah. And that's the hardest thing. So for us as brokers, we get everything. We say, look, send us everything. We look at it, and then we can pick a lender that's going to suit that won't sort of necessarily, okay, that looks a bit off with what we might look over here, or this one's got better borrowing capacity or whatever it is. Afterpay, zip pay, they're really popping up a lot now. So Afterpay obviously is more of a short-term credit sort of prepay lay-by style thing.
Right.
Zip pay is a credit facility, so it's treated similar to like a credit card. Okay. So ultimately, even if you owe nothing on it, they'll factor in an element of monthly capacity against it. So those sorts of things people don't really take into account, but when we see it, it's like, and there's also that conduct thing. If there's lots of Afterpay, lots of zip pay, whatever, well, usually people aren't saving for those things, so they're more often not living beyond their means. So
do you find a lot of people who are moving into this area are quite comfortably affording their mortgages, or do you think a lot of people are getting in over their heads?
Yeah, a bit of a mixed bag. Majority are fine. Majority of the clients that I'm seeing are usually they're coming here because they're in a really good position, but they're just a little, just a little bit outside the norm. So they might walk direct to their bank and that doesn't suit their policy, and then they get a no, and then it's like, well,
and then they see
look at my situation and go, well, that's because that was never going to work at that bank.
Right.
Because of that policy. So we move them to, here's 5 other options. They'll take you with open arms. The finance do see a little bit of debt consolidation. It is something, I don't know whether it's something that they're under financial stress, more so just I think the awareness now that people know there are cheaper options out there. And when you sit down and do the numbers, you really can save a lot of money by consolidating, especially when home loan rates are really cheap.
Yeah.
If you're paying 9, 10, 12% on a consumer loan and you can be paying 3% or less, that's a big saving. We don't like to stick consumer debt on a home loan and have it paid off over 30 years. No. We still try, so if we're consolidating 20 or 30,000 of debt at 3%, we tell them, okay, this is how much you need to pay for that over 5 years.
Right,
So,
like break it out.
So yeah, it's just, I mean, end of the day, it's all bundled into one anyway.
Yeah.
But just gives them that mindset that they don't go, oh, I'm saving all this money, I can just spend it.
Correct.
Whereas they can actually
Rather
chunk
have a
down
goal
it,
to
they're
chunk
paying
down.
it on 3%, not
That's good.
10%.
And aren't you also really surprised at just how young the buyers are coming into our area? You know, when we first moved here close to 20 years ago, it was quite a mature profile. And when I mean mature, you know, there were already a few kids in play, and it was sort of more in their 40s and 50s. But I'm seeing on my side as an agent a lot of really young folk coming into this area, and they're very cashed up. So with the banks, there's a lot of talk in the news about the banks loosening up a little bit. Has that impacted and made things slightly easier for some of our buyers? I know you're working with a few of our buyers at the moment.
Yeah, absolutely. So they have relaxed a little bit, mainly with the what they call the assessment rates, which ultimately increases someone's ability to borrow extra money. So that has helped. I think rather than them sort of relaxing, I mean, they definitely have come off a little bit because the Royal Commission's over, and but there's also, they're not just going to open the floodgates again. So I think more so than anything, they kind of know how they want their loan books to look, and we also know what's going to work at what lenders. So we've kind of, we've gone through this 18-month period where everyone's nervous and jumping at shadows to, okay, we know they're happy with that sort of thing, and so that's where we as brokers can position accordingly once we've got all the information. So to answer your question, yes, I think it has come off, it has relaxed a little bit, but there's still
a lot
uncertain
of control
times.
in place.
Correct. Not going to open up the floodgates again. Well, not in the near future anyway.
So Adam, how long is it taking to get approvals through on average? Because a lot of our vendors are very surprised at how long the finance is taking for their buyers.
So it really will vary depending on the scenario. In an ideal world, you can take it to any lender and you just go to a lender that's got a quick assessment time. For us, we've got, so usually as brokers you get quicker assessment times depending on the level of broker you are. So if you're writing certain volumes, you'll get your files picked up quicker. So my turnaround times with majority of banks would be say 2 to 3 days.
That's quick.
Having said that, there are some times when you got to go to a lender that this is the only option. So you're at the mercy of their assessment times.
And that's based on your buyer's profile as your client's profile, I should say.
So, certain policy may not tick, it might just be a really obscure one that, only one lender's going to touch. So you've just got to wait that out and all the rest of it. Again, if we can get it, the hardest part for us is getting all the information. Once we've got the information, we lodge it. Usually we can get something done in 2 or 3 days.
Got it. Good. So Adam, from a lender's perspective, what's your view on the current market and how the valuers are perceiving it?
From a lending point of view, obviously, the reductions in assessment rates is making people's capacity increase. So people are being able to borrow that extra sort of $50,000 or $100,000, which is usually the difference between them either selling their property and then they're ultimately buying another property. So from that side of things, I think that's going to move the market. There's going to be a little bit more, a few more transactions. In regards to obviously nature of what we do, the banks usually want a valuation every time they buy a property, so we see lots of them. Comments sort of around the election were, coming off, the area being sort of, northern New South Wales has a 2 or 3 or 4 years of high growth, and coming off top of market or nearing the top of market. Recently, we're seeing some where the comments are saying, same sort of thing in terms of we've had 3 or 4 years of good growth and nearing top or coming off top of market. But also now I'm seeing pop in there that due to Reserve Bank reducing rates and funding becoming cheaper, we are seeing an influx of new buyers. So take out that what you will. My opinion is that yes, it is. I think we would be got to be close to top of market. There's a lot of uncertainty in the market, all globally. Ultimately, not a time to be overextending yourself. Obviously every market's different too. Supply and demand. Sometimes if you just got to get if you want to be looking for a while and that property pops up, you might not get another opportunity. So I think that's where it just comes back to borrowing within your comfort level, so you don't overextend yourself.
And stock levels right now are extremely low. I don't think I've ever seen them this low in the last 10 years at least. And talking to other agents, we've noticed that. And the buyers just don't seem to have enough to choose from. So very interesting sort of time.
I think so. Yeah, I think that comes down to that aspect of people are selling because they want to capitalise or take some money off the table. But then they're finding that we don't want to we don't want to leave the suburb. You can't have it both ways. So if they're selling and taking some off the table, but then they've got to get back into the market.
Yeah.
And a lot of people realise that now. If I sell, there's nowhere else I can buy. So that's probably why there's not a lot of.
And I think that's why there's no stock. Yeah. I frequently find the perfect house for a buyer, and then they say, "But where am I going to go when you sell my house?"
Yeah, correct.
Even if I sell it for top dollar. So there is a bit of that conundrum.
Yeah, that's it. Yeah. So that's that whole, especially in Casuarina, I suppose, is just the proximity to the beach, and there's not a lot more land coming out. So
absolutely, right through this beautiful Tweed coast. Well, thanks for your time today.
No worries at all.
And
thank you for having
always
me.
good to have a coffee with you and catch up. So much appreciated.
Thank you. Thank you for your time.